This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on January 22nd, 2016. Our time is 8:39 Mountain. Radio show runs on your favorite radio stations. 6:30 CHED in Edmonton, 3 o'clock on Sunday afternoon. And I should note, on February the 7th, due to an Edmonton Oilers hockey game, we'll be on in the morning, Sunday morning, 10 to 11. If you ever miss a radio show, they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find our podcast there. It was an interesting week in the United States. They had a holiday on Monday, Martin Luther King Day. And then the markets reopened in the United States, and we saw a lot of volatility. Stock markets plunging and oil plunging down. Canadian dollar was taking a major hit. And we did see as well the Canadian interest rates were left by the Bank of Canada where they are at a 0.5 percentage point. And it was a very interesting week. Now, as we go through the rest of the week, we caught a little bit of a spark, and that was due to Mario Draghi, who is the head of the bank, central bank for Europe. He came out and basically said, we're going to do whatever it takes to save this market. And that has definitely given us a little bit of a spark. Canadian dollar all of a sudden has a little bit of momentum on its side. It was around 68.5 to 70. Today, it's over 70 cents, about 70.78, and the loonie is on a 3-day winning streak. A rally in crude prices obviously is driving the dollar higher, but make no mistake about it, there is a huge discount, and the discount is significant in the Canadian dollar and U.S. dollar. Interesting to note, on the precious metal side of things, after saying last night that they could be staring up at least a $3 billion impairment, Barrick is obviously very concerned about their year-end results. Think about it. A write-off of $3 billion due to what's happening in precious metals. And Harold, it was an interesting week. Draghi coming out and promising further easing in March. The Chinese Vice President, Wan Chao, vowing to look after stock market investors. As a result, you saw the stock markets did pick up, and there was a bit of a recovery in oil as well. And one thing that's going to be happening on the eastern seaboard of the United States on the weekend, the East Coast blizzard, and they say this is like the blizzard of all blizzards, is going to be hitting the eastern seaboard of the United States. One of the big events of the week was in Davos, and they had the World Economic Forum. And different experts were there, including our Canadian Prime Minister Trudeau. The UK Chancellor of the Exchequer, George Osborne, has warned of a cocktail of risks facing the economy, although once again, President of the European Central Bank, Mario Draghi, coming out and reassuring everyone that, don't worry, I will save the day. And you know what that means, Harold? It means printing money, buying bonds, a sea of liquidity, and as a result, a very positive thing for hard assets like diamonds, gold, and silver.
You bet. But at this point here, we've seen such volatility in all the markets, all the stock markets, the currency markets, the commodity markets, everything for these past few weeks. So the fact is, what we're actually seeing right now is just settling. We've seen oil drop so much, but it's up strong, about $2 today as we're taping the show on Friday. But don't think that oil's a buy at this point. It isn't. There's oil being sold in the Middle East at under $20 a barrel. So that tells me that oil is just on a bounce at this point here. These shorts are just taking a break for the weekend, but I don't see good things for oil right now. Nothing has changed. There's still a huge glut of oil on the market. Iran is now shipping oil. Saudi Arabia, like I say, is selling some oil at under $20 a barrel, which tells me that's what oil is going to. So I'm sticking with my predictions. I know it's not popular, but the fact is that oil is going to go to probably $20 now, due to the fact that there is oil being sold at $20. So I think oil is going to fall substantially next week. That's obviously going to push the Canadian dollar down lower. We've been very accurate in oil and in the currency markets, and I'm sticking by our prediction that the Canadian dollar is going to 60 cents. And the only reason it's going to 60 cents is because oil is dropping. Otherwise, the Canadian dollar would be going higher. So at this point here, look at the U.S. dollar, which is above 99 cents at this point. It's at 99.34, up 21 points today. So what that basically tells me is that the U.S. dollar is going to continue to rally. We're going to break par, which we've already done. We've already seen two closes above the par level in the U.S. dollar, which tells me the next major level for the U.S. dollar is around 102 to 103. Once it gets past that, which I believe it will, we're on our way to 108 to 110, which will push gold down to about 1,000, possibly as low as 850. We'll have to see how severe the sell-off is. Now, again, there are geopolitical situations that could change all this. You know, there's ISIS, there's all these situations fighting in the Middle East that could change this. That's why I've always said that we don't trade gold and silver. We buy it as a hedge against all the things that we're looking at right now. Obviously, there's no inflation at this particular point, not that the countries are showing any inflation, but we know that there is inflation. Food prices are higher. Just because gas prices are lower doesn't mean that there's no inflation. Believe me, the cost of living and the cost of food is going up substantially. And then you've got other major situations going on in the United States, which is Walmart. As the expression goes, as goes Walmart, as goes the U.S. economy. And that's exactly what we look at right now. Walmart is looking to close 260 some odd stores, most of those in the United States. That tells me that the retail numbers are horrible, that Walmart is not doing well, and what's actually we should be looking at are the dollar stores, because people are not doing well here in the United States. The only thing that is strong is the U.S. dollar. Stock market is extremely volatile, but, you know, the fact is that as difficult as things are in the United States, it's still way better than every place else. China's not doing well. Europe is not doing well. Obviously, Canada is not doing well at this particular point. So the only area that is doing better than most is the United States. That's why the U.S. dollar is trading at 99.34. Now, again, to get above par at this point here is no big deal. We got two closes again above par, and we're going to see the market rally to 103. At 103, that's going to push gold down to probably about 1,025, 1,030 in that area. Silver will probably drop down at that point into the high 12s. So, again, what you're seeing today on Friday, don't let it confuse you. I know there's a lot of people out there that follow our advice and are looking for us to pick a bottom on certain markets like oil, like the Canadian dollar and things like that. Believe me, we're not close yet. There's things in the market that are going to push these prices much lower, and don't try to speculate. Don't try to jump in and immediately try to find the bottom of this market, because, again, you know, when I see oil being sold in the open market at $20, that tells me that we're looking at least $20 oil. So with oil trading today at about 31, again, we're looking at still a substantial drop coming in the oil market. Now, most of my best clients and friends and everybody are in Alberta. So I feel for them. I speak to them every day. I know there's a lot of unemployment, and Fort McMurray is like a ghost town at this particular point. But again, we've got to let the markets run their course in order for us to get to a safe level. And again, there will be a time in the foreseeable near future where I will put a buyout on gold. But I mean on gold, on oil, and on the Canadian dollar. It just isn't right now. So let's stick with what we're seeing and what we're doing at this point here. My clients are doing very, very well. Most of my clients right now that are in private investments with us are making 25% a year or more in U.S. dollars. If that's of interest to you and you're not returning those type of returns, you need to give me a call. I'll speak to you on a private basis. I'll go over your investments with you. I'll make recommendations as to how you can do better and get rid of some of the junk that you're holding. And believe me, a lot of people are holding a lot of stocks that are junk. The unfortunate thing is that with most people, when it comes to investing, they get emotional. Not logical, but emotional. And emotion has really nothing to do with investing. So the fact is that there's a lot of people out there that are saying, well, as soon as the stock market comes back and my stocks get back to even, I'm going to liquidate and get out. That is the wrong thing to do, because the chances are you're never going to get back to even. Just look at the last 10 years. We've seen a massive rally in the stock markets after 2008 and 2009 when the Dow fell in half and the TSX plummeted. But the fact is that even during the time when the Dow went from 6,500 back up to 18,000, most RRSPs have not been profitable in the last decade. So if they're not profitable after such a massive move in the stock markets in Canada and in the United States, the fact is that we're never going to see that. If you're trading stocks and most of your net worth is sitting in the stock market right now, you're in big, big trouble. And if you are sitting in that area, you need to call me, and I will sit down with you over the phone. I will go over what your investments are, and I'll help you sort out what you should keep and what you should get rid of. And then I'll speak to you about some of our private investments that are doing tremendously well. All we want is for our Canadian clients to do well, and the fact is that's a very difficult thing at this particular point. So again, please don't get disillusioned. Don't think that we've seen the bottom of these markets yet, because nothing has changed. Nothing has changed to change the oil market, except that there's $20 oil being sold. That tells me the market's going lower. If the oil market's going lower, then the Canadian dollar has to go lower, because they're both tied into each other. So if oil does go down to 20, look for the Canadian dollar to drop again to the price that I have been predicting, which is 60 cents, right in that area. Gold is going to continue to fall, and that's primarily because the U.S. dollar is so strong. And once we get into the 103 and 105 level on the U.S. dollar, then you're going to see gold down to around 1,000 or maybe into the mid-900 ranges. So, again, as the markets trade and as we hit certain numbers, then I can reevaluate what the next move is in the market. And I will definitely let everybody know when it's the right time to get back into oil and when it's time to start to buy the Canadian dollar back. One other thing that's extremely important, just because a market hits its low does not mean that it's going to jump back up and make a massive move on the upside. Something has to change in order for that to happen. In order for oil to rally, we've got to see shortages in the oil market, not surplus like we're sitting with right now. So if we're sitting with a huge glut of oil in the market, and now Iran is shipping oil, and Saudi Arabia is trying to hurt everybody by selling oil under $20, why would oil rally? Why would we buy oil at this price when there's nothing bullish happening in the market? So just because a market hits a low does not mean that it's a buy, and we don't want to just sit there in an investment and not make any money. So again, as the markets continue to do what they're doing, we will update you and let you know exactly where the next lines of support and resistance are and what are the next major moves coming. But all in all, there's no doubt in my mind that the U.S. dollar will continue to rally, which will push gold lower. Make sure you're not leveraged or financing your gold or silver. You're going to get hurt by doing that. If I'm right and the U.S. dollar gets to 110 and the gold market gets to the 850 to 900 level, silver could actually drop down to 10. So the fact is that you do not want to be leveraged and you do not want to be financing anything at this point. You want to own your assets. That's why owning physical gold and silver, owning physical diamonds, art, classic cars, those are all the assets that are making money right now, and people are having fun with them. If you're in stocks and bonds and paper assets, you're not having fun right now. You look at the news, and you get your statements in the mail, and you can't wait to shred them. That's how bad things are going. But my clients at this point are doing extremely well. We picked the markets correctly. We put our Canadian clients into the right markets at the right time, and there's still plenty of time. Don't be disillusioned with the spread between the American Canadian dollar. Don't let that stop you from doing the right thing. I can help you get out of Canadian dollars into American-based investments that will do nothing but make money at this particular point and get you on the right side of the trade. So give me a call. I speak to clients every single day. And again, nothing is more important to Randy and I than doing our radio show, putting out our newsletters, and helping our Canadian clients. So if it can be of help to you, just give us a call and we'll spend as much time with you as you need in order to get you straight.
The telephone number to call to speak personally and privately with Harold. The call is free and obviously confidential. What you speak about, 100% private. 1-800-432-1022. 1-800-432-1022. RareColoredDiamonds.com is Harold's website. Our featured diamond of the week from RareColoredDiamonds.com is a .37 carat oval cut fancy vivid pink argyle. We'll talk about diamonds in the second half of the show, go through some auction results from December for those that might have missed them. Very good numbers. But if you're interested in investing in diamonds, go to RareColoredDiamonds.com now. Click on Featured Diamond of the Week. You'll see video of the diamond there. If you have our free weekly newsletter, you can see a picture of the diamond right in the newsletter. Speak with Harold about getting your name on the list for our free weekly newsletter. We send it out via email free of charge at the end of every week. RareColoredDiamonds.com. 1-800-432-1022. One of the big concerns is the stock market. And it is interesting to note that Brent Ahrens had an interesting article on Market Watch. He said the Dow could fall 5,000 points and still not be cheap. Hard to believe, but the Dow Jones Industrial Average could fall by another 1,000 to 5,000 points and still not be cheap compared with long-term valuation measures. That's the stark conclusion from an analysis comparing current stock prices to underlying measures such as per-share revenue, earnings, and corporate net worth. And it suggests that even if we are now overdue for a short-term bounce or rally of some kind, buying heavily into the latest sell-off isn't the kind of one-way bet that value investors crave. Stocks are certainly, and they go on to say here, much cheaper than they were a few years ago. After the worst start to a new year in Wall Street history, the Dow Jones Industrial Average is down 10% since January 1st. Small company stocks are now deep in bear market territory after falling more than 20% from their last spring highs. But cheaper doesn't necessarily mean cheap. Data from the U.S. Federal Reserve, meanwhile, says U.S. non-financial corporate stocks are now valued at about 90% of the replacement cost of company assets, a metric known as Tobin's Q. But the historic average, going back a century, is in the region of 60% of replacement costs. By this measure, stocks could fall by another third, taking the Dow all the way down to 10,000. In fact, on Wednesday, it was 15,767. Similar calculations could be reached by comparing share prices to average per share earnings, a measure known as the cyclically adjusted price to earnings ratio, commonly known as CAPE, after Yale professor Robert Shiller, who made it famous. If you'd like to read this article, we'll be happy to send it out to you in our free weekly newsletter. Speak with Harold, personally and privately, about investing in hard assets. 1-800-432-1022. The call is free. It's confidential. You can connect with Harold at RareColoredDiamonds.com. But maybe one of the bigger problems with the stock market than even the overvaluation, Harold, is the fact a lot of companies are not using proper accounting. And we have talked about this on the show in the past. So many companies are fudging their numbers. And we even had a story a couple of weeks ago in our newsletter about a hedge fund that decided to send all the money back that they were managing for clients because they said, first off, we can't trust the stock market because it's manipulated. Secondly, the numbers were being given by governments when it comes to inflation numbers and employment numbers. Can't trust those. Then on top of it, you have corporations not giving you true numbers when it comes to their earnings. A lot of things are fudged in this environment. As a result, they've decided to shut down. They just don't think that in this current environment, they have a fair chance to make money based on what's happening in the stock market. And Harold, that is just literally unbelievable when you think about it. A company sending money back, and they're in the money management business, throwing up their hands and saying, listen, the deck is stacked and it's not in our favor, so let's just take a break, and maybe somewhere down the line we can revisit this thing. We have about 2 minutes left.
I actually find that to be incredible because, markets go up and markets go down, and if you do believe that the market is not bullish and it's going to drop, you can always put your clients short the market type of thing. So, again, I do agree, though, that the markets are manipulated and a lot of times don't make any sense, and we don't want to play in an unfair playground type of thing. And that's exactly what's happening right now with certain markets like gold. The fact is that, back in 2011, gold was at $1,900. A few weeks later, it had dropped 300, 400, 500, and nothing had changed in the market. They had forced the market down on purpose. So I do understand their feeling. And again, I get frustrated from time to time because you should be able to trade in a free market meaning that the market should trade on its own volition. More buyers and sellers makes the market go higher. More sellers and buyers makes it go lower, and that's the way the market should be. But unfortunately, it isn't. That's why I shy away from a lot of these markets, because they're just not trustworthy.
Worse than 2007. A top banker came out this week and warned of a looming wave of worldwide bankruptcies. The world's financial system has become dangerously unstable and faces an avalanche of bankruptcies that will test social and political stability, according to a leading global banker, William White. He's the chairman of the OECD's Review Committee and former chief economist for the Bank of International Settlements. And he actually spoke with Ambrose Evans Pritchard with the UK's Telegraph, and he said the financial system, things are worse than they were in 2007. He spoke with Pritchard at the World Economic Forum in Davos, Switzerland. And he warned that the macroeconomic ammunition to fight further economic downturns was essentially all used up by central banks. And he says that he's very, very concerned. He said the only question that needs to be answered is whether we're able to look reality in the eye and face what is coming in an orderly fashion, or whether it will be disorderly. See that story in our free weekly newsletter as well. Connect with Harold. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week, a .37 carat oval cut, fancy, vivid pink argyle. And we'll talk more about diamonds after we take a break. You're listening to the World Financial Report on radio. Connect with Harold at RareColoredDiamonds.com, 1-800-432-1022. Back to talk about diamonds right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on January 22nd, 2016. Our time is 9:05 Mountain. Our radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. On February the 7th, the Oilers are playing in the afternoon. We will be on at 10 in the morning. So on February the 7th, the Sunday, we'll be on at 10 in the morning. We have a podcast through iTunes. Type in The World Financial Report on radio. You will find us there. Our website, RareColoredDiamonds.com. And as you heard Harold mention in the first half of the show, a generous offer on his behalf. If you would like to call him, the call is free. It's confidential. Anything said between the two of you remains private. 1-800-432-1022, 1-800-432-1022. Speak with Harold about the current economic and geopolitical times we're in and where you should be having some of your money shifted. We obviously have a strong belief in hard assets, and that includes diamonds. This week's featured diamond from RareColoredDiamonds.com is a .37 carat oval cut, fancy, vivid pink argyle. You can see it at rarecoloreddiamonds.com, featured Diamond of the Week. For those that might have missed it, we have some auction results from Sotheby's and Christie's at the beginning of December. And we won't go through it right now. We will after Harold's commentary on diamonds. But if you missed it, you can see them in our free weekly newsletter. We can send them out to you. But there were some outstanding results, and we'll get to those after Harold's commentary. But Harold, you look back on 2015. 2015 was a very good year for rare colored diamonds, and all the projections for 2016 are still the same, if not stronger. So it's a very exciting time for naturally fancy colored diamonds, rare colored diamonds, and it will continue into this year.
You better believe it. Again, the worse the world economies get, the more people realize that there are alternative investments out there that do way better than stocks. I know most people are conditioned when they're younger and growing up through their families and their fathers and grandfathers and things like that, how to invest. But the fact is that the world has changed since then. I remember my grandfather, who I love more than anybody in the world, sitting me down one day as I was getting older and telling me to invest in stocks like General Motors and put them away for retirement and things like that. And look what would have happened with that. Not that in any way, shape, or form I'm doubting my grandfather. I'm saying that things change. Markets change. Perceptions of markets change. And the fact is that what were great investments, back in the day are not so much anymore. So I've always been in the alternative asset business because, again, there's a tremendous need for it, and never more than we're in right now because everything is so risky. If you keep your money in the stock market, if you listen to your financial advisor that's going to say to you, sure, there's volatility, but the markets are cyclical. They always do this. There's just going to be a buying opportunity when the market falls down. But the fact is they don't sell you out. They don't say, okay, the market's risky right now. Let's sit on the sidelines for now, wait for a bottom in the market, and then buy back in. That's the smart thing to do, not just sit there, let the markets take all your money away and wait 7, 8, 10 years for the market to come back to break even. That is foolish. That makes absolutely no sense whatsoever. If you're bearish on a market, you're nervous that you're going to lose your money, get out of that market and sit on the sidelines and wait for a better opportunity. Because in 2008, when the Dow was sitting at 14,000 and it started looking bearish, in actual fact, we were one of the very few on our radio show that knew about a potential mortgage crisis. In actual fact, I remember like it was yesterday, my son coming home from college and telling me that we're missing the boat investing in real estate, that all of his friends in college are making $20,000 a month, buying homes and selling them and getting more, and it made no sense. The fact is these were liar loans. They were willing to give loans to college students or people with no jobs, and then sell the debt, overseas to somebody else. And that's what started this all happening. And when I saw this happening, we talked about it several times on the radio show. And when the markets plummeted, the fact is that we were ready for it. All of our clients were not in those markets. We were in gold, and gold skyrocketed at that point. So, again, if you feel that there's too much danger in the market and it's not safe for you to be there, get out of it. Sit on the sidelines and wait. There's nothing bullish in the market that's going to make you rich trading the stock market right now. There's nothing happening that is all of a sudden you're going to wake up in the morning and find that everything is perfect and we're living in an amazing time where the economies are great and the stock market is going to surge. It's not happening right now. There is a plunge protection team in the United States that does what it can to keep the stock market somewhat in check. But the fact is that there's no reason to be in stocks right now. The Canadian economy is doing horrible, so why would you want to be in the Canadian stock market? The U.S. economy is in big trouble. Why do you want to be in the U.S. stock market when there are other alternative assets that will do much better for you? You can keep your money in the bank at 1% and lose money every single month that you have your money sitting in the bank. There's no reason for that to happen except for you to pay bills. We have private investments that to do with programs that we deal with on a day-to-day basis in a business that's 4 generations old. And my clients are making more than 25% a year in U.S. dollars. Add to the fact that the U.S. dollar is up 40%, and my clients are making a fortune, where most people are not. So if you're not in that category, you need to give me a call. I'm going to help you. And then there's the potential of buying diamonds. Now, the fact is that there are certain diamonds that are skyrocketing in price. Blue diamonds, for example, pink diamonds as an example. Green diamonds are the next pink and blue diamonds, and we're starting to mine those and cut and polish them. We've got tremendous opportunities for our Canadian clients to do well again, just outside of the mainstream. We're not trading stocks. We're not trading commodities at this point. We're sitting there waiting for our opportunities in those areas, but there's tremendous ways to make money. You just need to know about them. We also know that one of the best investments that you could possibly make for the next 5 years to 10 years is owning pink diamonds. The Argyle mine in Western Australia produces 95% of the pink diamonds in the world, and we know that they're getting ready to close within 4 to 5 years. This is a rare opportunity that we will never ever get again, because there is no mine in existence that does what the Argyle mine does. So the fact is that when the Argyle mine closes, not only are all the pink diamonds going to be gone, but on top of that, the Argyle mine is most well known for the fact that it produces industrial type diamonds. Type of diamonds that sell for a few $100s a carat. The type of diamonds that are used to cut other diamonds, that are used in the oil industry to cut through shale and rock type of thing. That's going to be gone also, because when they close the Argyle mine, that's 30 million carats of diamonds a year. They're going to be gone off the market. Now, there's no way in the world that the Argyle mine was profitable because of their pink diamonds. It's way too small. There's only 55 diamonds over a half a carat that come out of the Argyle mine each year, and those sell for an absolute fortune. And then you've got the smaller pink diamonds, where 95% of them are under a quarter carat, and those diamonds are going through the roof. So you could have your money sitting in stocks and you're going to lose your money. You could trade markets that you're not comfortable with, like certain commodities, and not know what you're doing, where 90% of the people that trade those markets lose. Or you can give us a chance. I've been in business 35 years. I've traded the commodity markets, and I'm very, very well known for trading those markets. I'm the first one that brought you the diamond market. Nobody talked about diamonds as an investment until we did 10 years ago, and now it's one of the hottest markets in the world. We've got the most Argyle pinks, the most yellow flawlesses, blue diamonds, green and orange diamonds that we cut and polish ourselves. So, again, there's tremendous opportunity out there, and if you're not doing well right now, give me a call. It doesn't matter whether you're wealthy or you're just barely getting by. If you've got investments that are underperforming, let me go over them with you and see what I can do to help you out. But all in all, Randy, the diamond market has never been better, and you're right, 2015 was the best example of that, because all you need to do is go and look what certain diamonds sold for at auction, and you're going to be absolutely blown away. There are blue diamonds that 10 years ago were $200,000 a carat that are now not only $2 million a carat, but a vivid blue diamond, the Blue Moon, which was only 12 carats, that last year was selling at $2 million a carat. In 2015, at the end of the year, that diamond sold for $4.5 million a carat. It was 12 carats, and it sold for $48 million. So you do the math. It was $4 million a carat. That's what's happening in the diamond business. And these are the type of diamonds that we have. We have diamonds starting at $20,000, investment quality diamonds. We have diamonds that go all the way up to $40 to $50 million. The majority of our clients are hardworking, everyday people, just like us, that just want to do better than what you're doing in the stock market or in the putting your money in the bank. So all in all, I think that the diamond market is on fire and will continue to be so, with the stock markets and the other markets around the world doing so terribly.
Connect with Harold. The call is free, and when you speak with Harold, it's 100% private, confidential. 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com, our featured diamond of the week. And we do know here in about 4 to 5 years, the Argyle mine in Western Australia will be shutting down. And we have a diamond that is from that mine. It's a .37 carat oval cut, fancy, vivid pink argyle. Harold has mentioned to me that there are people out there full well knowing that the mine is going to be shutting down. It produces 90 to 95% of the world's pinks. They're already starting to hoard the diamonds, full well knowing that when the mine is out, depleted, and shut down, they're going to have diamonds that are of incredible in value. And what we'll say to you is do not delay come Monday morning. If you're interested in investing in this diamond, speak with Harold, rarecoloreddiamonds.com, 1-800-432-1022. Obviously, during the holiday season, Christmas, people are very busy and may not have heard about these auction results, and we'll be happy to send them out to you. Sotheby's Magnificent Jewel Sale from December 9, 2015, New York City, Lot 392. It was a platinum fancy-colored diamond and diamond brooch from Bulgari. Now, the fanciful floral bouquet set with a marquee-shaped fancy vivid yellow diamond weighing 2.86 carats, a round-cornered square modified brilliant cut fancy intense blue diamond weighing 2.47 carats, and a round fancy intense bluish green diamond weighing 0.209 carats, accented by marquee-shaped diamonds weighing approximately 7.40 carats, further set with round baguette and pear-shaped diamonds weighing approximately 9.20 carats. Gross weight, 16 carats. It was signed by Bulgari with the maker's mark, 1964. The estimate at auction, $500,000. $500,000. When the hammer went down, it sold for $1,750,000. That's right. $500,000 was the estimate, and these people they're not stupid. They know what diamonds are worth, and when they do these estimates and auction estimates, they're very accurate. But you can see how strong the market is in the environment that we're living, and when you have special diamonds, $500,000 sold for $1.75 million. Lot 91, a white gold fancy intense blue diamond and diamond ring, centering a marquee-shaped fancy intense blue diamond weighing 2.14 carats, flanked by round diamonds weighing approximately 0.35 carats. Now the estimate on it, $500,000, sold for $910,000. Lot 474, platinum fancy vivid yellow diamond and emerald ring, centering a cushion-cut fancy vivid yellow diamond weighing it was 5.32 carats, flanked by pear-shaped emeralds, and this was a beauty. The estimate, $175,000, it sold for $328,000. And even some of the smaller diamonds, like Lot 258, and this was an 18-karat gold platinum fancy vivid yellow diamond and diamond ring, and the yellow diamond was 3.24 carats, and it had baguette diamonds weighing approximately 4.40 carats. The estimate on it, $65,000, and it sold for $90,000. Harold, just in those auction results alone, you can see that diamonds in 2015, colored diamonds, rare colored diamonds, did very, very well. And usually we see the big increases over in the Far East, China, when we have the auctions from Sotheby's and Christie's. But this time in New York City, Sotheby's Magnificent Jewel Sale, we saw some major, major results. Just imagine, $500,000 to $1.75. That person who invested in that diamond and had the opportunity to wear it and show it off must have been very pleased.
Better believe it. The fact is that it's the mid-price diamonds that are actually going up the most. You know, we tend to concentrate on the famous diamonds, the Blue Moon and all those diamonds type of thing, but in our reality, it's the medium price to lower price diamonds that percentage-wise seem to make the most amount of money. And again, that's what the market that we've created. Not only have we created again, the opportunity for clients to invest in these, and they're long-term investments. There's no doubt about it. You don't buy a diamond, look to sell it in a couple of years. Diamonds don't work that way. Diamonds are much better than owning a retirement savings plan, because the fact is that they're not influenced by stock traders. And if a retirement savings plan is a long-term investment, which it is, well, so are diamonds. You're much, much better off holding on to a diamond for 10 or 20 years than you are holding on to stocks. You're going to make much more money, and it's got other tremendous value to it. Don't forget, they're portable private wealth. You can take them with you no matter where you go. So the fact is that diamonds will continue to do well. We're very excited about what the diamond market is doing, and I think the next few years, with all the volatility and danger in the markets, most people are going to run to this type of investment, and we're very, very excited about it.
Featured diamond of the week, 0.37 carat, oval cut, fancy, vivid, pink argyle. It is a beauty. You can see it at rarecoloreddiamonds.com. Featured diamond of the week. And Harold has that generous offer. If you'd like to speak with him personally and privately, call 1-800-432-1022. The call is free. Obviously, Harold's time is free, and everything is confidential. What you say to him is private. rarecoloreddiamonds.com, and the telephone number 1-800-432-1022. Now, there was a sale right the next day. Sotheby's went on December 9, and Christie's went on December 10. That's usually the way it is in New York City. It was Rockefeller Plaza. Lot 334, a colored diamond ring set with a round, brilliant cut, fancy intense blue diamond weighing approximately 1.74 carats. Now, the estimate on that was $700,000. The price realized, $1,900,025. Actually, it was $1,925,000. An absolutely stunning amount. $700,000, the estimate, and once again, these people are smart. They know what they're doing, and it came in at $1.9 million. Lot 354, and this is a colored diamond and diamond ring by J.E. Caldwell. And it was set with a marquee, brilliant cut, fancy, intense blue diamond. The estimate on it, $400,000. It went for $1.2 million. Lot 131, a colored diamond and diamond ring, set with a cornered cut, rectangular, modified, brilliant cut, fancy, intense yellow diamond. The estimate on it, $350,000. It went for $605,000. Harold, as we saw, with the two auction results that we had from December, Sotheby's magnificent jewel sale and Christie's with their sale, we're in a situation now where diamonds, not only are they doing very well at auction in the Far East, but in North America, New York City, we're seeing big increases even beyond what the estimates were predicting. And that is a very strong sign for this diamond market. And when you have a featured diamond like we do, a 0.37 carat oval cut, fancy, vivid pink argyle, one would have to think that when the Argyle mine shuts down, this is going to be worth a substantial amount of money in the future.
You better believe it will, Randy. And again, it's a very, very exciting situation. First of all, 95% of the pink diamonds that come out of the Argyle mine are small. They're under a quarter carat. So the featured diamond is much bigger, and it's an oval, which is a rare cut. It really shows the color beautifully. You can tell by the video. And then on top of that, it's vivid in color, which is the best that you can get. The higher the saturation, the color, the more expensive the diamond is, and the more it's worth. So to own a fancy, vivid pink Argyle diamond today is one of the best investments you'll ever turn out to make. I think that the price of that diamond over the next 10 years could go up 1,000%. And we've seen it happen with blue diamonds, and now we're going to see it happen with pink diamonds. So we've still got time left. We've got about 17 or 18 brand new pink Argyle vivid diamonds They are ridiculously rare. And again, these are the type of assets that will go up by around 50% a year. So we are anticipating that the price of the Argyle pinks not only will continue to skyrocket, but if you happen to own a Vivid, you're going to make a fortune on it. And I've got some beautiful diamonds starting at around $35,000 as far as Argyle pinks. And then there is another opportunity, because we bought a parcel of pink Vivid diamonds that are not Argyles. And this is very exciting, because if you look at it in this way, the Argyle mine produces 95% of the world's pink diamonds, and it's going to close, and all those diamonds will be gone. That means that the other 5% that may come from India, South America, or Africa, they will now represent 100% of the diamond, the pink diamond market. So those diamonds will be ultra rare too. So I do happen to have, at some very, very good prices, pink Vivid diamonds that are non-Argyles, but the colors are outstanding. And those are diamonds that we could get at a better price, but they're still going to make a fortune. So I'm very, very excited about that. Again, we've been doing a lot of diamond cutting. My partners are fourth-generation diamond cutters and miners, and they own their own cutting facilities in New York and in Antwerp. So it's just very, very thrilling to see what's happening in the diamond market, and that we're involved not only in the sale of cut and polished diamonds through rarecoloreddiamonds.com, but we also own H. Siegel Fine Auctions, which is the secondary market that will resell your diamonds. And oh, by the way, we haven't had an auction for a while. What we did discover is that we needed to update our technology, which is being done at present, because the majority of people that will now go to our websites and attend our auctions will do so on their iPhones. And basically, we had to change our technology, because when we first started H. Siegel Fine Auctions, more people were actually visiting that site and with their home computers. So that has totally changed. So by March, that will all be done, and we're going to be holding some outstanding auctions for our Canadian clients. So again, there's some great opportunities in diamonds. Along with the fact, my clients are making over 25% on private investments that we're doing with them. If you want to hear about them, give us a call, and I will certainly explain it to you and show you how you can get involved also.
Speak with Harold personally and privately about investing in diamonds. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week, a .37 carat oval cut fancy Vivid pink Argyle. See it at RareColoredDiamonds.com, featured diamond of the week. And in our free weekly newsletter, you can get that from Harold. We send it out via email, free of charge, every week. You can spend minutes going through it and be up to date, or spend hours. We have auction results from December for those that missed them. Sotheby's and Christie's. And it is a little time consuming when I go through these to give you the information, put it in the newsletter, but it is worth it, because it is just amazing to see a diamond like we had estimated at $500,000 go for $1.7 million. And when you see those auction results, that's why we want to pass them on to you, and we have them in our free weekly newsletter. We can send them out to you. The potential for the diamond market in 2016 is even stronger than in 2015. And as Harold was saying, now is the time for hard assets. And one of the stories that I think you should really take a look at, and we didn't get time to get to it, but it is in our free weekly newsletter. Albert Edwards is predicting that the next global financial collapse could definitely happen very soon. He said global growth is no longer enough to service global debt. Creditors will have to take losses. Translate that. This means that banks that lent the money out, they may go bust. It's an article. It's a must-read. We have it in our free weekly newsletter. We can send it out to you. RareColoredDiamonds.com, 1-800-432-1022. And Harold, thank you for your knowledge for another week and another very interesting show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold about investing in diamonds. RareColoredDiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. See our featured diamond of the week. All you need to do is go to the website right now and click on Featured Diamond. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.